Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, always good to be with you.
What's happening on the credit markets?
Oh, yes. You know, we had the favorable trend in the yield curve. It's a complicated thing, you know. That's the difference between long-term maturities and shorter maturities. So it's just the curve, and with a boom, and it's hard to say that it's been a boom out there because the U.S. growth has been weak, so has Canada, but it's been a financial boom, and the curve will flatten with that, and then maybe 12 to 16 months in there, something like that, which it has done. And then when it reverses and starts to steepen, then it says the game's changing. But initially, the banks kind of like the change to steepening. It helps their profitability. So this is what happened during the latter part of the summer. We had steepening, and that helped the bank stocks. And then there was a correction, and then now in the last 2 weeks, steepening is on, and it isn't helping the bank stocks. I think the steepening is saying it's a real game changer. And then on the other hand, we had the spreads, which is, of course, the difference in quality between high-grade and low-grade stuff. And we used, a CCC-rated bond, which is junk, relative to long-dated treasuries. And when there's lots of confidence in the system, spreads narrow because people are reaching for yield. And when there is no confidence, it's kind of one of those things, watch out, which was the case last year when crude oil prices were falling and U.S. dollar was firming, and you had quite a crisis in the commodity market down till last January, and with that, spreads widened out to about 21%. And then now it's narrowed in to around 11% last week. And this shows a lot of confidence, and also probably helped by the European Central Bank, which was buying a lot of German corporates out of the market. So, it's like water. It always seeks a level. And so you've had a terrific narrowing of spreads. Now, back in, I guess it was August when we were looking at this thing, we thought, oh boy, it's one of those moves that keeps going until excess. And we thought excess would begin to be measured by getting down to 25 on the RSI. And actually, a week ago, it did get into 23 which is terrific. And then in just the last week, that's reversed, and widening spreads. It's up by almost 100 basis points, which is very sharp. And it's probably saying that the trend is ending, and then has reversed indeed. And then with the yield curve continuing to run, this is sort of like in May and June of 2007 in that party, where in May the curve reversed, and in June the spread started to reverse, and that's when you had the first casualty, which was Lehman Brothers, which was highly leveraged. This is where the problem appears is that there are many players get highly leveraged in the credit markets, betting on whatever trend is on. And then when it reverses, there's a whole lot of people offside. So this is what's happening now. It's also, we're into November, and if there are problems in the financial markets, pressures, there's been some downside pressure on the stock market. Nothing too dramatic down. And so November is often when the markets can clear some of the problems out there that are driving prices down. So we've had moderate weakness in the equities. You've had this change in the credit spreads. And also, I think it was about 5 or 6 weeks ago, crude oil became somewhat overbought at a time when one would expect seasonal firmness, and then it sold off down to the 52 here. Oh, so it got to 52, and it's now down to about 44. There we are, 44.11. And so this is a depressant on equity markets, also a depressant on low-grade bond markets. So now here it gets a little tricky because often crude oil can set a seasonal low in December, January, and we've played this one for decades. Then often copper can set a seasonal low like November, December, but last year the selling pressures in crude oil were so persuasive that they pulled copper down, everything else down right to things. So who knows what kind of a washout it'll take to end this decline in crude oil. Maybe it might be steady here for a week or so, but we're still looking for a pretty good low in it come late December into January. And with the other day, they announced that the build in crude oil inventories in the U.S. was the sharpest increase in, I don't know whether it was in forever or at least for a long time. So all of a sudden, a lot of the stuff can appear. So we're in very interesting markets, Jim.
Well, it's interesting. A small fire at a refinery somewhere on the eastern coast of the U.S. boosted Vancouver's gasoline prices by 5 cents a liter overnight. I thought it was supposed to take 90 days.
Yeah, that was actually a failure in a gasoline pipeline, and somebody was fixing it or changing or something, and a backhoe hit pipeline, and so it sounds like an accident rather than a failure of the pipeline, but it shut down a large supply of natural gas, of gasoline, and boom, the markets react all over North America. This is the one good thing about the pricing mechanism, is that it signals immediately for people to start slowing down consumption and for others who produce to increase their production. So, and sometimes like this, it can get quite painful when you have a sharp rise in the price of gasoline at the pump. But that's the way the real world works.
Well, I've heard reports there are super tankers sloshing around full of gasoline, traversing between Asia and Europe looking for a customer. Why can't they just drop by Vancouver for a day?
Sure, we'd like that. But there's a lot of people in the West Coast here who don't like tankers here. But no, it's mainly tankers full of crude oil that have been cruising around, doing figure eights out there in the oceans with inventory. But that story's been on for some time because it was 2 years ago when crude oil was up at $105, and then it was 2008 when it reached 147. You'll remember the tout then was what did they call it? Peak oil. That the world was going to run out of crude oil, and what happened was you had a new technique come in with with fracking, drilling down and then getting the drill rod to bend sideways so you get into the pay zone, and voila, there it changed the whole world. And of course, what we were looking for then was that crude oil prices would follow natural gas prices, where natural gas prices sort of might have traded in a $7 to $12 range, and then they came down to $1 and change, and then lately it's sort of 3 to 4. But anyways, you had the prospect that the same revolution in drilling and building reserves of natural gas would be happen in the oil patch, which it has done. So it's a new world. You got a lot of investors out there who are staying overly long the oil stocks because there's a habitual idea out there that you have to be long oil stocks because of the crazy people in the Middle East are going to disrupt production, but their Middle East production is a diminishing thing relative to the rest of the world. So this fracking is outstanding, marvelous technical development. It's sort of like at the turn of the century. I'm talking about going into the early 1900s when the mining people figured out how to mine low-grade copper deposits. They're called porphyry coppers, and the one that I recall, not from that time, but reading about, was the Bingham Canyon, just south of Salt Lake City, Utah, and it started somewhere around 1910 as initially a few small silver deposits, and then at around that time, whatever mining company was there figured out how to mine huge tonnage economically, and that mine, I used to ski in the late 60s down at Alta, Utah, fabulous powder snow just outside of Salt Lake City. And one day we took a day off and went over to view down into the mine. Well, it was the biggest hole in the ground I'd ever seen, with a rail then hauling the ore out. And now, of course, it would be those huge ore trucks. And it is still going, that mine. And the hole in the ground must be absolutely amazing now. So this is what, it was a technological revolution. And then in the 70s you had the technological revolution in mining and extracting low-grade gold prospects. And then now you've got that huge technological revolution going on in oil and gas extraction, and it is a different world. So investors should not be looking at the oil stocks as a long-term investment betting on Middle East disturbances. They're like any other stock, overbought to oversold and back again, and one has to trade with it. And it's a great time to be, participating or observing in the financial markets these days, because it's just fascinating things going on.
The Fed says it's still seeing positive signs for a rate hike. Will they do it before the end of the year?
Oh, yeah, this is habitual thinking. It's the notion that the central bank, in this case the key central bank, the Federal Reserve in the States, really does have powers to manage the economy. And but here we are, you're asking the question because many pundits in the street are asking the question about whether the Fed will raise interest rates or not. But if you look at LIBOR, it's increased from about 50 beeps to almost 90 now. Let's say 40 basis point increase in yield for 3-month LIBOR, and the long-term treasuries peaked out in price in 1st of July, around then, and interest rates have been going up for long-dated treasuries now since July. And then in the last week, the magic went out of junk stuff, and yields are going up there. So market rates of interest are going up. So why would anybody bother to ask what the Fed's going to do? And what they're going to do is follow the natural rise in interest rates that is happening all on its own because market forces are changing. And in the senior central bank, certainly since the 1873 bubble, the Bank of England was hitherto held. They couldn't raise the discount rate beyond 5.5%, but after that they could. So then you get changes in the senior central bank administered rate. And if you take a look at what market rates of interest are doing, you can realize that when you're in big exciting times like now, the senior central bank will follow a change in interest rates. In this case, the market rates are going up, and at some point the Federal Reserve will be forced to raise interest rates, and that I'm watching for that because the explanations they'll provide will be most interesting because you don't really have a strong economy, so rates are not rising because of strong economies, not rising because of strong commodity prices. But what is happening is I think the interest rates going up is the market's beginning to sense that there's a lot of debt out there, and how will companies and states, governments, service the debt when everything's slowing down? So it's a post-bubble deflationary world where interest rates go up because of the inability to service debt, and not going up because you've got big threats of inflation and booming commodity prices and all that sort of stuff. So this will be very fascinating as it evolves.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, the British High Court has ruled that Parliament has to vote on the Brexit strategy, or just on Brexit itself. And since that ruling, I've noticed the British pound is going up. Is this a good move on their part?
Well, it's always discomforting to have a uniquely weak currency, but I haven't read too much about it, but it seems to me that it's ambitious Supreme Court intruding upon a political decision. The political decision, of course, was to leave Brexit. That was a Democrat vote, and the Brexit won. And so you still have many people who wanted to be hands-on and resist the change, and without really looking into it in detail, that's what appears to be the case, is the establishment is wanting to resist the change that the public is determined. And this is what has a lot to do with the political strife in the U.S. at this time. You have the authoritarians under the Democrats. Well, God, this is scary down there because the the apparatus of government, meaning Department of Justice, meaning the Internal Revenue Service, which is the tax raisers, and the media. It's sort of like a merger and of these government agencies, which should be independent, have all become Democrats, and they have had their way for a long time. And there is a new player in the game with Trump, who is, well, what it is, Jim, it's a popular uprising where people are fed up with what they see. And what do they see? The governing class is living very well, and making promises about how wonderful. But then if you take a look at real take-home pay, no advance in 20 years. And also you've got the number of people who are not in the employment rolls up to about 80 million or something like that. So those who are working are not advancing in the game. And there's huge numbers who are not working. And this is quite dissatisfactory. And so it's similar to what happened in Eastern Europe in the late 1980s, where the ordinary people looked at the governing classes and, oh, they had it good, looked at the promises, not so good, and then said, hey, we're going to change things. And it was just spontaneous. Like, no planning agency got together and said, oh, we're going to have a riot. But it was an uprising, and it was successful. It took on murderous police states everywhere in Eastern Europe and changed things. And the symbol of that was bringing down the Berlin Wall. So here we are now, where the Democrats under Obama have been working very hard for the 8 years to, well, let's call it, do the legislative equivalent of building a Berlin Wall. I mean, the rules and regulations that have come in have been extraordinary, and they are compelled to micromanage everybody's life. And so the public's taking a look at this, and it wasn't Trump who prompted the uprising. The uprising was there, and they chose Trump. So I don't see Trump as the risk at all. What I see is a very powerful movement that will eventually be successful. This is it. But then you had with Summer, with the FBI head, Comey, listing the number of criminal possible charges that Hillary could face, and then deciding, breaking precedent, and instead of handing the whole package to the Department of Justice, he decided on behalf of the Department of Justice that there was nothing to prosecute. Well, as we're seeing, many professionals within the FBI are seeing what looks like criminal activities and absolutely frustrated by the fact that the head of the FBI was not pursuing it. So this is the way I've looked at it. Wrote a piece last week that you now have the popular uprising within the FBI. They are an investigative force in the name, and they are to identify criminal activities, and then they take the case to the Department of Justice, who prosecutes it. So this is most encouraging. Now, this is also enhanced by the WikiLeaks, and then, of course, there is the incredible one with relating to the former politician Weiner, and so there's 650,000 emails there, and so it looks like the professionals within the FBI were highly incensed that due process was not allowed to run, and then they probably looked around and said, now which one are we going to concentrate on? And then, of course, there was the gift with Weiner's emails and computers. So this is political theater that is without precedent, where a supposed democracy has been so corrupted by, well, ambition, just pure ambition. This is what a constitution exists for, is to limit those who are in government who would be ambitious. And this is ambition right out of control, and the uprising by the public is beginning to have some influence. And then, as I said, that last July it looked like the FBI had been compromised, and that is now changing. So I think every day that one is alert and politically in a time when you've got the best political theater in, who knows, hundreds of years. It's absolutely fascinating.
Bob, we do have a question for you from Belgium, our good friend Frank de Beer. Bob, do you expect the unwinding of the post-bubble contraction to be something equal or worse than the 2008 crash, or do you expect it to be a slow, gradual decline in asset prices?
Yeah, definitely a decline in asset prices, Frank. The feature of every post-bubble contraction has been that the senior currency, which is the U.S. dollar, becomes chronically strong against other currencies and commodities for most of the time, which has generally been the case. And I think it's driven by the fact that during the bubble, a good portion of the debt expanded is written in the financial center. What I'm saying is that a lot of that debt is due and payable in U.S. dollars into New York. So that means you got to sell the other guy's currency, your own currency, or resources in order to get U.S. dollars to service the debt. So that then is the overriding condition, and then you have the business cycle, which has been positive since 2009, but it's now getting very long in the tooth and old, and with credit markets changing, it's suggesting maybe a resumption of the bear market for stocks and a very much slower economy. Now, how fast it's going to be, Frank, I don't know. I think the main thing is to get that it's going to be down, and there will always be in any contraction times when asset prices fall rather quickly, and people will get quite excited about that. So whether it can be as hard as in 2008, we don't know, but if you're on the wrong side of a bear market, they are all the worst thing you've ever experienced. So it's best to have some liquidity, have some comfort, and let the other people get passionate about the markets.
Bob, thank you so much.
Jim, it's good to be with you, and we'll look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. And if you're like Frank in Belgium, you can forward questions to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.